So when we look at work together 6-3, our instructions read, extend the up-to-date balances to the balance sheet and income statement columns. Number 2, rule a single line across the income statement and balance sheet columns. Total each column. Calculate and record the net income or net loss. Label the amount in the account title column. And instruction number 3 reads, total and rule the income statement and balance sheet columns. So we have a series of steps that we need to go through and do, and it's important that we have to do them in the correct order. The first thing that I want to point out is when we started our worksheet, we went through and did our trial balance. And with our trial balance, the most important thing that we needed to know is do not go on unless your debits and credits equal. Don't think, oh, I'll go back and fix it later. The most important thing is these debits and credits equal in your trial balance. If they don't, nothing else will work. So we really have to find and fix that. And then I just reviewed with you how we did our adjustments. So now what I need to talk to you about is I need you to understand what is the income statement and what is the balance sheet, okay? The income statement, when you hear the word income statement, it truly means we are going to determine whether or not we have made money or lost money. To determine whether or not we've made money or lost money, we're going to deal with 2 account classifications, revenue and expenses. That's going to determine whether or not we're profitable or if we had a net loss, okay? So what we have to do is we look at our income statement, and I will say only revenue and expenses go on our income statement. When we see the heading balance sheet, the word balance means, hey, it needs to balance or equal. And what did the very first thing that we learned in accounting class that had to equal was our accounting equation of assets equals liabilities and owner's equity. So we would put on our balance sheet our assets, liabilities, and owner's equity. Remember, every account has a classification. The classification is going to tell you which column it needs to go in. So even though we don't really talk about classifications as much anymore, you still need to know them because it's going to help you to determine whether or not it goes on the income statement or balance sheet columns. So if I start at the very top of my worksheet, my first account that I have there is cash. What is its classification, Isaac? And where does it go? Income statement or balance sheet? Nope. Yes. What is the purpose of a balance sheet? To balance what? Yes. Assets equals liabilities plus owner's equity. Okay. So remember that our balance sheet is for our accounting equation, and our income statement is for our revenue and expenses. So what I do to work on our balance sheet or to work on cash is I take a look at cash has a debit balance of $9,800. Is there anything in the adjustment columns for cash? No. So I'm going to take $9,800 as a debit and I'm going to put it right here on the balance sheet as a debit. I am not trying to make debits and credits equal. I'm just carrying that number over into the correct column. So each one of these accounts will either go in the income statement or it will go in the balance sheet column. Fox, petty cash is what type of an account? What column does it go in? Yes. So I take a look at petty cash as a trial balance of $150, nothing in the adjustment column. So it's going to go over here on the balance sheet for $150 because it is an assets, and assets go on the balance sheet column. Accounts receivable Ruby Price is what type of an account, Clayton? Debit is going to be its normal balance. The classification: asset, liability, owner's equity, revenue, and expense. Yes, it is an asset. So where is it going to go? On our income statement or balance sheet column? Yes. So accounts receivable Ruby Price has a debit balance of $2,795. Nothing in the adjustment column. So I'm going to put $2,795 in our balance sheet column. Now supplies. Seth, what type of an account? So is it going to go on the income statement or the balance sheet column? Yep. So we have something a little bit different though with our supplies, because I have on trial balance $456, and then if I look at the adjustments, I have a credit here of $131. So I have a debit and I have a credit. Does that mean do I add or subtract? Subtract. So I have to find my new balance of supplies, which should be $3,025. Would you agree? Do you see how I got that? Did I say 3,000? Okay, 325. Sorry. I wrote the right number and I said the wrong number. How's that? Everyone's looking at me like I'm nuts. I'm like, I'm pretty sure I can do the math right. Just can't say the number out loud correctly. So that is why every time I say take a look at what's on your trial balance and look at your adjustment column, because you will see that the adjustment has a credit of $131. So I have to subtract the two. I'm going to do exactly the same thing with prepaid insurance. It's going to have a trial balance of $750 and it has a credit on our adjustments of $250. So I'm going to have $500 in the debit balance. I think I said that number right. So far, all of those have been debited. Now, when I get to accounts receivable, Richard Navarro, R. Navarro, that is going to be a liability, because anytime you see the word payable, you know that it's going to make it a liability account. Liabilities still go on our balance sheet. But what's going to be different about doing accounts payable, Richard Navarro? It's not going to be debited, it's going to be credited. That's it. Gary Baldwin Capital has a credit balance of $14,885. There is nothing in the adjustment column. Gary Baldwin Capital is an owner's equity account, so it goes on our balance sheet as a credit for $14,885. And again, there's nothing in my adjustment column, so that amount goes there. Gary Baldwin Drawing. Drawing is a contra account to our owner's equity. It goes on our balance sheet. You will notice that Gary Baldwin Drawing has a debit balance of $3,400. There's nothing in the adjustments, so I'm going to put $3,400 on my balance sheet as a debit. My next account that I do is going to be income summary. Is there any value in income summary? So that one will just stay blank. We will be using income summary in the future. Just leave it there for now. So now I get to my account sales. Thomas, what account classification is sales?
Revenue.
Where does revenue go? Income statement. So it should not be on your balance sheet. So I have sales has a credit balance of $4,320. That goes on my income statement as a credit. My next account is advertising expense. Dale, what type of an account is that?
Liability.
Try again. What's the last word of the account?
Expense.
So what's its classification?
Owner's equity.
Nope. What's the last word of the account?
Spend.
What's its classification?
Spend.
There you go. Good job. So expenses and revenue go on our income statement. So when I take a look at that, that means my advertising expense here has a debit balance of $931, nothing in my adjustment column. I'm going to put that $931 as a debit on my income statement. Below advertising expense is insurance expense. And insurance expense has nothing in the trial balance, but it has an adjustment debit of $250. So I need to put that as a $250 in the income statement column. Now, this is a common mistake that I see when people work on their worksheet. They go through and they see this $931 here as a debit, and then they see this $250 and they think, oh, that really looks like a credit. And they end up putting that $250 over here as a credit, not as a debit. Just because they look and it's not in the same column. Make sure you do realize that all of your expense accounts should have a debit normal balance. Okay. Same thing for miscellaneous expense. Miscellaneous expense is going to go on my income statement as a debit of $378. Supplies has nothing in my trial balance, but it does have an adjustment debit of $131. And the last expense account that I have is utilities for $1,100. And I have just gone through and put all of my accounts either in the income statement or in the balance sheet column. And again, it's important for you to remember that it will go in either income statement or balance sheet. The account classification will clue you in. Now, we have to go through and do math. Here's my question. The purpose of our income statement is to determine whether or not we've made money or lost money. When I look at this income statement column, eyes up here, just so you can get this, I want to make sure we're paying attention. My income statement credit column has what number in it? What is this? What account is this? Sales. So my credit column is sales. What is my debit? What are all of these? Expenses. Which one do I want to be bigger? Sales. If my credit column is bigger than my debit column, I have a net income. If it's the opposite, if my debit is bigger than my credit, then I have a net loss. Should these two equal? No. Okay, our goal on our income statement is not to get the totals to equal, because again, the purpose of an income statement is to find out whether or not we've made money or lost money. Is it possible for a business to break even? Yes. I'm going to tell you it's not going to happen in this accounting class. Okay, so don't think that my total right here needs to equal. The whole point of my income statement is to determine if I've made money or lost money. That also means my balance sheet is not going to equal, because what I am missing is my net income or my net loss. A net income would raise my owner's equity. A net loss would do what to my owner's equity? Lower it. Would you agree? So we know that these numbers right here are also not going to equal. So what I need you to do right now is, using your calculator, I need you to go through and get your total for income statement debit and credit, balance sheet debit and balance sheet credit. And again, they should not equal. Look at it. To determine whether or not we've made money, we only look at our income statement. We don't have to look at our balance sheet column. So when we take a look at my totals, which are going to magically appear now, if I look just at my income statement column, which one is bigger, Isaac? The credit one. And the credit one is represents what? Revenue. And my debit is going to indicate my expenses. So right now, if I look here at these totals, my revenue is greater than my expenses. So therefore, I'm going to have a net income. So what I need to do right now, on line 17 under my account title section, I'm going to write the word net income. Now, how much is my net income? Kendra, did you figure it out?
1,530.
My net income? Nope. Can't be 20,000.
No, I said 1,530.
See, I'm like, I thought you said 20. I'm like, nope, can't be. That's way too big. 1,530. Yes, I agree with that. How did you figure that out, Kendra?
I subtracted the debit from the credit.
Okay, so what she did is, in her calculator, she put in her revenue and subtracted her expenses and got 1,530. Okay? So now, we said this is a net income. Would you agree? If it's a net income, does it increase or decrease owner's equity? Increase. So I'm going to put 1,530 on my balance sheet as a credit because it increases owner's equity. And then it also goes on my income statement as a debit of $1,530. So what I've just determined that my net income is $1,530. My net income gets written twice. It gets put once on my income statement and it goes once on my balance sheet. The other way to remember where it goes is we now need to add down to get our debits and credits equal. If I take 1,530 plus 2,790, what does it give me, Kendra? 4,320. That makes my income statement equal. The testing point is when I take 1,530 here and I add to it 15,440, what should it equal? There's 16,970. If it doesn't, I have made a math mistake somewhere or I have not gone through and calculated my adjustments correctly. The big thing that I see students do, please stop. Okay, look up here. The big thing that I see students do is they subtract these two, find a number, subtract these two, find a number, and these two numbers are not the same. The whole point of determining your net income is we look here in my income statement and find the difference. That number, that difference, goes on my income statement column and on my balance sheet. If it doesn't make my balance sheet equal, there is a mistake somewhere on your worksheet, and you need to find and fix it. If you're here in class, let me know and I'll come through and I'll look at it. It could very well be that you just did the math incorrectly on these adjustments. Or it could very well be that you didn't transfer your numbers over correctly and you have the wrong amount for your total expenses. It could be either way. So again, what I need you to do right now is to go through and total up your income statement and balance sheet columns. One of the things that Applia does for us that I need you to realize is it puts a double line below here to say that, hey, that these equal. One of the things that it doesn't do is we would have a single line going all the way across here to show that we've done some math. And there would also be a single line right here, right above line 18, to show that we took 2,790 plus 1,530 to give me my 4,320. Okay, go ahead and try that on your own.